Hi, Jonathan York, Bear Financial Partners, looking at investment markets. Still a pretty tough time out there for US equities as they really struggle with the rising inflation and obviously the increase in interest rates. So as expected, the Fed did increase interest rates by 0.5% for a new target now on the Fed funds of 0.75 to 1%. That's the largest hike in 2 decades. So that's taken the 10-year now to trading just above 3%. But the Fed will obviously argue that, given the inflation, rising inflation, but also as well the economy is still pretty strong. Latest jobs data was still a pretty encouraging number. 428,000 jobs created versus expected around 380,000. But certainly the worry about rising interest rates is really taking its toll on the sort of growth stocks and big tech stocks. Nasdaq now is down just over 20% from its 52-week high. Obviously, still got earnings sort of running through earnings season, and again, that's been a little bit of a mixed bag. But still, all the time as well, we've still got COVID in the US, but also as well, obviously, the ongoing war in Ukraine. And that's certainly going to be very interesting because after the May the 9th big military parade in Russia, it's probably more a question of what Putin didn't say. He didn't sort of escalate the war. We're still sort of congratulating the sort of forces. But really, Putin and Russia have really been humiliated at just about every turn. And the might of the Russian military machine is really, as they've been thwarted by Ukraine. And now it's just going to be very interesting to see, how Putin can really extricate himself from this, because really he's not going to come out with any sort of credibility. He's really sort of lost face at just about every turn. Now, oil sort of interestingly sort of stabilized around that sort of just over $100 on WTI. But obviously still quite a bit of pressure on Europe to sort of reduce its reliance on Russian oil and Russian gas. In the UK, Boris Johnson under renewed pressure after the recent sort of midterms really sort of resulted in a resounding defeat for the ruling Conservative Party. Now, luckily, he's still got a couple of more years before a general election. Now, I sort of briefly mentioned Europe's under increasing pressure out there now to reduce its consumption of Russian oil and Russian gas. But that's not just something that can be done sort of overnight or in sort of a week's time. Certainly some of the bigger countries, sort of Germany, etc., they get around 30-35% of their energy needs come from Russia. going to be interesting really to see how they sort of wean themselves off that and sort of find alternative supplies. Look closer to home, and Australia is sort of gearing up now to the election. The latest sort of leaders' debate was potentially a narrow sort of victory for the Labor. Really in the polls, it really is pretty tight. And potentially, again, it could come down to a fact that it's sort of a vote against Scott Morrison rather than a vote for Labor. Now here in New Zealand, certainly the rising interest rates is starting to bite now in terms of mortgage is on the sort of refix level. Around 50% of the New Zealand mortgages are coming off fixed rate and are now being reset. They're coming off the rates that was probably sort of 2.5 to 3% and are now being reset at sort of closer to 5 or above. Now that obviously has a pretty major drain on disposable income. And also obviously on the housing market as well, that's starting to fall now, and it's just going to be interesting to see how much further it does fall. One of the major high street banks has come out and predicted that house prices will fall by around 15% over the next 2 years. So really all eyes on the budget now, and the government at the present just seems to be sort of throwing money at projects left, right and centre, trying to sort of shore up its sort of support. Because at present they're certainly struggling in the polls. And certainly as yet, the sort of reopening of the borders to sort of Australian tourists and now to sort of international tourists that are sort of vaccinated hasn't really had the big sort of impact that I think the government was expecting. That's maybe sort of twofold because, certainly many of the other countries had opened up their borders certainly a lot sooner, but also as well, the cost of travel, etc., is really starting to impact people's travel plans. The other sort of conundrum out there as well is, we've got record low unemployment, but we've got employers out there who are, begging for people to come and fill vacancies, but yet we've got rising beneficiaries, which, if you look at those numbers, they don't seem to stack up. Maybe in a further little dent as well, the sort of latest global dairy auctions were down a little bit. Indeed, that's led to one of the major sort of banks revising down its forecast now for the payout for the dairy industry. Been revised down to $9.40. Now, certainly will be interesting to see if we do see a further rate increase from the Reserve Bank in May. As well as we head in towards the end of the sort of financial year for KiwiSaver, it's just interesting just to check your balances and make sure you've contributed enough to get that maximum government contribution. Now on the fixed interest side, the Mercury Capital Bond, that was pretty well supported out there. And if you are looking for income options, there's plenty of alternatives available out there. Go to the website www.baitfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.